Ray Dalio built the world's largest hedge fund, Bridgewater Associates, managing over $150 billion. But his real legacy isn't just wealth. It's the principles and mental frameworks that guide how he thinks about markets, risk, and life itself. Dalio believes that the economy works like a machine, and if you understand its cycles, you can prepare for both booms and busts. In this episode, we'll break down Ray Dalio's timeless lessons, the principles he lives by, the strategies he uses to navigate uncertainty, and the challenges he faced along the way. Principle 1. The power of principles. Dalio is famous for his book, Principles. He argues that every investor must create a set of rules to guide decisions. Why? Because emotions, bias, and short-term noise constantly cloud judgment. Principles act as your compass, keeping you consistent when the market tempts you to overreact. Lesson: create written rules for how you trade and invest. Don't rely on gut feelings alone. Principle 2. The economy as a machine. Dalio explains that the economy is a machine driven by three main forces: productivity growth, short-term debt cycles, 5-10 years, long-term debt cycles, 50-75 years. He argues that most investors focus only on the short term, ignoring the long-term debt cycle, which explains major crises like 2008 or even the Great Depression. By studying these patterns, Dalio predicted both the 2008 financial crisis and shifts in global power between the US and China. Lesson: don't just look at today's headlines. Understand where we are in the cycle. Case study: 2008 crisis. Bridgewater didn't just survive 2008. It thrived. Why? Because Dalio's framework told him the global economy was over-leveraged. Most investors ignored warning signs. Dalio's principles made him cautious, protected capital, and positioned him for the rebound. Lesson: principles plus discipline equals sign. Survival in crises. Principle 3. Radical transparency and teamwork. Dalio runs Bridgewater with radical transparency. Employees openly critique each other, and decisions are based on data, not hierarchy. Why does this matter for investing? Because it removes ego from decision-making. When you're willing to hear the brutal truth, you make better choices. Lesson: seek honest feedback on your ideas. Don't trade in an echo chamber. Principle 4. Risk, parity, and diversification. Dalio is also known for creating the risk parity strategy and the all-weather portfolio. Instead of chasing one hot asset, he balances across stocks, bonds, commodities, and gold, structured so the portfolio can perform in any environment. He often says, the biggest mistake investors make is believing that what happened recently will continue. Lesson: don't bet everything on one outcome. Build a portfolio that survives rain or shine. Challenges Dalio faced. Dalio's success didn't come without setbacks. In the early 1980s, he was convinced the US economy was about to collapse. He went all in and was wrong. He lost nearly everything, even had to borrow money from his dad to pay bills. That failure humbled him. It taught him the importance of humility, diversification, and not betting the farm on one opinion. Lesson: failure is feedback. Use it to strengthen your principles. Principle 5. Think in probabilities, not certainties. Dalio doesn't ask, will I be right? He asks, what are the odds? He knows no one can predict the market perfectly, but by thinking in probabilities, he prepares for multiple outcomes. Lesson: don't seek certainty. Build strategies that work across possible futures. Principle 6. Balance, ambition with reality. Dalio emphasizes radical open-mindedness. Be ambitious in your goals, but brutally honest about your weaknesses and mistakes. This mindset applies to trading. Admit when you're wrong, adjust quickly, and stay humble, no matter how big your wins. Key takeaways for investors. Ray Dalio's principles can reshape how we approach markets and life. Write down your rules and follow them. Study long-term debt cycles. Diversify. Don't bet on one outcome. Embrace radical transparency and feedback. Learn from mistakes. Failure is a teacher. Think in probabilities, not certainties. Outro. Call to action. Ray Dalio shows us that true wealth isn't built on luck. It's built on principles, discipline, and the courage to face reality as it is. If you found these lessons helpful, subscribe to the Wealth Blueprint for more strategies and timeless wisdom from the world's greatest investors and traders. Because in the markets, just like in life, principles are the blueprint for success.